Hey everyone, welcome back to the channel. We're thrilled to have you here. Today, we're diving into the latest decisions from the US Federal Reserve in 2025 and how these decisions are poised to impact not just the US economy, but the global financial landscape as well. The Federal Reserve's actions are always closely watched by investors, economists, and policymakers around the world. This year is no different, and the implications are vast. If you're into the future of finances and markets, you definitely don't want to miss this. We'll break down what these rate cuts mean for various sectors and how you can stay ahead of the curve. Remember to like the video and subscribe for the latest economic insights. Your support helps us bring you more in-depth analysis and timely updates. All right, let's get into it. There's a lot to cover, so let's start with the basics. In December 2024, the Federal Reserve cut interest rates by 0.25%. This move was largely anticipated by the market, but it set the stage for further actions in 2025. But predictions for 2025 suggest an additional rate cut of 50 basis points over the year, likely in two 0.25% increments. These cuts are part of a broader strategy to stimulate economic growth. The Federal Reserve's approach is cautious yet proactive, aiming to balance the needs of a recovering economy with the risks of inflation. So, why did the Fed decide to cut rates? The reasons are multifaceted and rooted in both domestic and international economic conditions. Well, lowering interest rates means making borrowing cheaper, which encourages spending and investment. And this is crucial for driving economic activity, especially in times of uncertainty. When businesses and consumers have access to cheaper credit, they're more likely to invest in new projects, hire more employees, and spend on goods and services. This move is in response to the economic challenges of 2024, which included slower growth and rising uncertainties. The Fed aims to strike a balance between inflation and economic growth. By carefully adjusting interest rates, the Fed hopes to manage inflation without stifling economic progress. It's a delicate balancing act that requires constant monitoring and adjustment. Now, what does this mean for the global economy? The ripple effects of the Fed's decisions are felt far and wide. A rate cut tends to strengthen the US dollar. This can have significant implications for international trade and investment. This could raise the cost of commodities like oil and gold on the world market. Higher commodity prices can affect everything from manufacturing costs to consumer prices. Plus, countries with dollar-denominated debt might face higher debt servicing costs. This can strain national budgets and impact global financial stability. But what does it mean for you? Whether you're an investor, an employee, or a consumer, the Fed's decisions impact you directly. Wondering how this will affect bank interest rates or the prices of goods? Here's the scoop. Lower rates generally mean lower borrowing costs, which can be great for taking out loans or mortgages. However, it also means potentially lower returns on savings. If you're saving for a big purchase or retirement, this is something to keep in mind. Lower rates generally mean lower borrowing costs, making it easier for consumers and businesses to finance big purchases and investments, but also potentially lower returns on savings. Savers might need to look for alternative investment options to get better returns. Prices of imported goods might increase due to a stronger dollar. This can affect everything from electronics to clothing, impacting your daily expenses. In conclusion, the Fed's decisions in 2025 are set to be pivotal for global markets. The effects will be felt across various sectors and regions, influencing everything from commodity prices to personal finances. If you want to stay ahead with more economic analysis, make sure to subscribe and hit that notification bell. We'll keep you updated with the latest trends and insights. Thanks for watching and see you in the next video. Stay informed and stay ahead.